our next look is at warrants. So I'm going to start with just a basic explanation of what warrants are, but we'll take it a step further as well with Liz Tien from Citi, who specializes in equity derivatives. I'm really pleased to have her here. So she's here to explain the ABCs of using warrants in SMSFs. And I know a lot of you are interested in that. So Liz, thank you so much for being here. But I did want to start taking a step back. Our audience is very savvy, but I think just to put a bit of the building blocks in place, just tell us in simple language what warrants are.
Yeah, so Nadine, it is really an umbrella term, right? So it's for, derivative type products that are listed on the exchange. So we're listed on the ASX, we're listed on CBOE. So anyone who buys the warrants, you can buy it through your broker like CommSec or, any of your brokers, and it will sit alongside your other shares. So when you see your BHP, you'll see your warrants as well. Very broadly speaking, you've got two types of warrants. You've got trading warrants and you've got investment style warrants. Trading warrants can be over shares, people can go long, they can go short, it can be over commodities, oil, that's been very popular
Topical,
recently,
yeah.
Index, S&P 500, NASDAQ, etc. That's on the trading side. It's usually shorter term, people taking a view of something's going to go up or down. Then we've got the investment products, which, as you mentioned, that's probably the more popular type of warrants that are used in self-managed super funds.
All right, really good. And Mike, I hope that answered your question. Mike had said what type of derivatives are available to non-sophisticated investors, for example, available through common brokers such as CommSec. So you can access. Please.
If you've got a broking account, the broker will require you to one-off sign a warrants agreement form. You read through the education. Once you sign that, you can trade any style of warrants listed on the market.
Got it. All right, thanks, Liz. So here's a question. Why are warrants even allowed in SMSFs?
So SMSFs have a rule around if you want to borrow in an SMSF, you can never be margined, and you can only lose what you put in. So because self-managed super funds, super is so popular in Australia, the Australian market for warrants grew and actually tailor-made what we call instalment warrants, which are Australian specific only, to really cater to the rules around self-managed super funds. So why are they allowed? If you borrow in your self-managed super fund and say you borrowed and you bought a stock, people might remember during the GFC some stocks went to zero, like ABC Learning. You can only lose what you put in, you can't be margined. So when we structure instalment warrants, which are available for self-managed super funds, anyone who buys them, you can lose money in that, but you can't be margined further, and your other assets in your self-managed super fund, your other shares, etc., we can't call on that and ask you to liquidate those other assets to help pay off any losses here.
Really? So unique to Australia, unique to our self-managed superannuation system. So is there any guideline that you can give us as to what percentage of users, for example, would be using installments in SMSFs?
Yeah, we see roughly when we look through around 70%. So a lot of it is self-managed super fund money, either people running their own SMSF or advisors using it through some of the super platforms like NetWealth, for example.
And so we always like examples, so do our viewers, so thank you. What are some of the popular trades that are being used by SMSFs then?
Yeah, so look, people go warrants, oh, that sounds so complicated. What actually is it? I always say bring it back to a loan. We all know in Australia, we know what a loan is like. Most of us need one if you were to buy a property or an investment property. So when you think about, when you get a loan to buy that investment property, investors should think through the same things. Okay, do I think that asset's going to go up over time? Will I get income? Rent from an investment property? Here, will I get dividends? What are the interest costs? How long do I anticipate holding this for? So these kind of, strategies and how you think about getting a loan, buying any investment, you should also apply in this instance. So what's really popular is we'll see a lot of self-managed super funds buy the top 10, top 20 stocks. They're very popular. The banks, the miners, And then also ETFs, they've been growing in popular. We have about 150 warrants over ETFs. So they might buy, an ETF, an installment warrant over an ETF. They might just gear it around 50% and then a couple of shares. And what they hope is over time, some of that loan gets paid off. So in time, they just take the shares unencumbered.
So high level as well, just flesh out how they work, because you've mentioned dividends, franking dividends as well.
Yeah, so let's use an example if you were to buy an ETF or Commonwealth Bank. So if the Commonwealth Bank share price is, say, $200, or let's use an ETF. I think we might have a graph for that, so we can bring that up.
Okay.
The ETF is $50. Now, you could go out there and buy the $50 ETF, or you could buy an installment on that ETF, and the loan is $30, so you put down $20. You've put down $20, you have a loan against the ETF sits in trust for you. Citi sets up a trust. You can pay that loan off any time you like. If you change your mind 2 years, 3 months later, go, I'll pay off my loan, I'll take the ETF. In between that time, just like you are holding the ETF, you'll get all the dividends and franking credits passed through to you. You'll get a tax statement end of the financial year saying this is the interest that you've paid as well.
So you'd have to be quite involved with your auditor as well. So you need to be declaring this just as you would declare any other sort of investment. When it comes to your SMSF.
Especially for SMSFs, obviously, we provide a tax statement and they, our holders just pass that straight to their accountant.
So costs and risks, Liz.
Yes. So costs, you're paying an interest cost on the instalment, obviously depending on whether we're lucky enough to get more rate cuts. At the moment, they roughly around 7 to 8%. Some could be a little bit higher. It depends on which instalment you buy, but that's generally around the interest costs at the moment. But obviously you can pay that interest cost anytime. So when you think about costs, think of it as a loan product. When I go to the bank to get a loan, I pay interest costs. Same thing here.
And that interest, is monthly, or would it?
Yeah, great question.
Yeah.
We've just like when you go to a bank and you have different choices for a loan, we've got 4 different types of instalment styles. So some people like prepaid interest, some people want interest capitalised daily, some people want the dividends to go into the bank account, some people want the dividends to pay down the loan. They're the different features we have in the 4 different instalment styles. So you can kind of pick what fits you.
Yeah, really interesting. I wasn't aware of that at all. So Citi really has sort of solutions for really anything. Okay, so risks though?
Yeah, risk. So the key risk is, just like any investments, you want that asset that you've bought to really go up over time. And if it goes down over time, same as if you bought those shares, if they go down, you will lose money. So capital risk obviously is a key thing to be aware of. That's why when we see investors buy instalments, they usually don't buy it over one share. They diversify, buy a couple of shares, maybe a couple of ETFs, and have a time horizon. We all know when you buy shares, it's about how long the time frame is in your market. The gearing, some people might only gear 30% or 50% and not have very aggressive gearing. And the most important thing is what companies are you buying?
Okay, so it is fundamentals as well. You've got to know what you're doing. So Liz, you mentioned that the Australian market in particular for installment warrants has grown up around our SMSF system, very specific legislation around tax, franking credits as well. So again, can you just tell us, because a lot of our viewers will be much interested, how you use franking credits in an installment strategy in an SMSF?
Yeah, so yes, franking credits is so key. What we find, I guess, the more popular strategies using instalments. I mentioned already, Nadine, people who kind of buy a portfolio and they don't change it all that much and they hold it long term for growth. But we also see some users kind of just buy, and they'll buy it, hold it maybe only for a few months, instalments, just before stock goes ex-dividend. So how does it work? When we buy that $180 Commonwealth Bank shares, we get the dividends. When you use the instalment, because let's use CommBank as an example, if you're 50% geared, you might only put down $90. you will pay interest on the loan, but you will get the dividends and franking credits for the full amount of CommBank shares, even though you've put in only half. So we see a lot of holders kind of put in half, they've got a loan attached to it, but they're getting the full dividends, the full franking credits. You know, roughly double, because you've basically geared up. Obviously, you've got to be aware that you're paying interest at the same time.
Yeah, of course. So are we seeing an evolution, a constant evolution of the warrants market here in Australia?
Look, it has, the warrants market's been around for 25, I think close to 30 years. It really started, you know, some of our viewers might be lucky enough to remember the Commonwealth Bank float. So when the Commonwealth Bank floated, it was through an instalment receipt process, buy now, pay later. And it was so popular, along with the Telstra IPO, buy now, pay later instalment receipts, that the banks went, that's a great idea, buy now, pay later, and they wrapped it into an instalment warrant. So from there, that's how it's kind of evolved, and what's changed is, you know, ETFs have become more popular, and we've started issuing over ETFs as well.
Yeah, wonderful. And so more product development to come. Watch this space, and if you have any questions, I'd say you can contact you.
Contact
Cindy.
We've got a website, and you know, call our 1300 number.
Yeah.